This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by. This is the broadcast from City Hall, the home of the Greater London Authority. Please stand by.
Good afternoon, everyone. Can I welcome members, officers and the public here in the chamber watching on the webcast to today's meeting of the Audit Panel. If you could just make sure, a quick bit of housekeeping, if you just make sure your phones, devices, whatnot are switched to silent mode. And if you do need to move the microphone, lift it up by the bottom rather than by the swan neck bit. So can I start by asking our clerk, Hannah Barlow, if any apologies have been received?
Thank you, Chairman. Apologies received from the Deputy Chair, Assembly Member Harani.
Thank you very much. So before we begin, I'd just like to welcome all of our guests. We always have many guests at the Audit Panel who sort of come in and out like a sort of Swiss-based musical theatre throughout the meeting. But if I could just officially welcome everyone now. We have Faye Hammond, who's the Chief Finance Officer at the GLA. We have David Esling, who's the Head of Audit Assurance Risk Management at MOPAC. We have Mark Woodley, who's the Group Audit Lead at MOPAC. We have Stephen Reid joining us remotely. He's the Partner and Head of UK Government and Public Sector Audit at EY. We have Jacob McHugh, Senior Manager at EY, and Deanne Tranmer, Executive Director of Corporate Resources and Business Improvement at GLA, and Daniel Bridge, Programme Director of the Royal Docks. And so a quick bit of housekeeping before we start our main business. Can I ask the panel to note the recommendations set out at item 2 and ask members if they have any other interest to declare?
Noted and noted.
Good, excellent. Can we confirm the minutes of the meeting held on the 7th of July 2025 to be signed by me as a correct record? Somebody has to mumble something that sounds a bit like agree. Good, okay. And can I ask the panel to note the completed actions arising from its previous meeting? Great, well noted. Okay, so we now move to the External Auditor's Audit Report Results Report. So can I welcome again Stephen Reid and Jacob McHugh from EY. Stephen or Jacob, would one of you like to introduce the report?
Thank you very much, Chair. Let me start and then I'll hand over to Jacob as he is in the room with you this afternoon. Apologies again that I can't be with you in person. I'll take this report as read, but in essence this report summarises the results of the audit of the authority's financial statements to the year ended 31st of March 2025. The audit is substantially complete. There are some areas where we're continuing to work on, but nothing of concern that I need to draw to the panel's attention. The intention is, following the conclusion of the outstanding areas, to issue an unqualified opinion on the financial statements. And similarly, in relation to our value for money considerations, we did not identify any significant weaknesses in arrangements following the work that we discharged as set out within our plan. We made 2 amendments to the plan. One was materiality based on the draft financial statements, and another was just to make sure that we captured from a risk perspective, from an audit risk perspective, a couple of different areas, given that they had become material in the year. We have provided a summary on page 7 of the degree to which the authority was prepared and responsive to the audit. I have to say the audit has overall gone very well, and clearly a much accelerated reporting timeframe this year compared to the prior year. So I want to place on record my thanks to Faye and her team for the support to my team in allowing us to discharge our obligations. But with those few words, Chair, let me pass to Jacob to just very briefly highlight a few key matters for the panel's attention.
Thank you. And I'll take you to page 4 of our audit results report, where Stephen has helpfully run through both the scope update and our value for money update. In terms of the one material audit difference we had identified during the course of audit, I think it's important to note that this had no net impact on income and expenditure. So whilst this was 60 million reclassification or movement between debtors and creditors, that was due to later information received from the London boroughs, which the GLA have then put through correctly into their updated financial statements. There was a similar adjustment of around 15 million in respect of the business rates position, and again, that had no net impact. If I then just take you to the status of the audit, which was page 5 of our report. So just a brief update on these matters in turn. So in terms of our borrowings and cash procedures, they are complete with no issues identified. Debtors and creditors, as I say, we've finalised that and we've got the 2 differences just mentioned. In terms of leases, again, that's complete without significant issue. And in terms of income, expenditure and grant income, there are some final queries we're awaiting on, which is why we're not quite at that final signing stage. And similar with the group reporting, we are waiting on reporting from those audit teams, which will happen over the next couple of weeks. Those final procedures that are set out on the status of the audit will remain open until we put pen to paper, so they are standard for this stage of the audit. And the final 2 points on that page, we haven't identified any control observations or issues with our independence to bring to your attention. The rest of the report then goes through those risk areas we raised in our audit planning report in detail. And then, as Stephen brought to your attention earlier on page 7, we have a dashboard of factors impacting the execution of the audit. I think this is a really pleasing dashboard. Yes, there are a couple of areas we think require improvement, and we'll work closely with management in terms of how they can be improved for the next audit cycle. But overall, this has been a well-facilitated process. And as we move into early November, we look to finalise the audit. So I'm happy to take any questions there.
Thank you very much. One of your areas for improvement was about access to finance team and personnel to support the audit. To support the audit. What I mean, that sounds obviously a bit worrying. You know, in the context of what you said, everything sounds good, but that just seems a bit odd that we haven't given you access to the right people in a timely way. What does that mean in practice?
Yes, so I think where we've brought this out in the narrative there is largely across the group. I think it's fair to say we have had access to the finance team throughout the course of audit. This is more around, I guess, the speed of some of those responses. I think primarily we've seen that where one finance team service both the GLA and the GLA-H audits, that can cause some capacity issues or kind of speed issues there. And there is still an element of kind of protracted turnaround of requests at some of the subsidiaries. Equally, I think it's fair to say that we were having this conversation in February last year and we're having it in October this year. So clearly there's some good signs of improvement as well.
Okay, thank you very much. Faye, I don't know if you wanted to add anything on that. Are you happy that you're able to get the right people, the right contact and the right information speedily?
Yeah, so we've certainly increased the capacity in the team with more permanent staff since I've been here. So I think that's really helped. And some of those were internal appointments, so that's really helped, like the consistency as well, which is lovely to develop our internal staff. So from that point of view, we've definitely improved the position from where we are. In terms of the specific comment around GLA-H and GLA, we're looking at what that might mean for our structure permanently in the future, because we do recognise this has been a bit of a challenge for you. So we're thinking, you know, around, I think we might even be recruiting for a post now for it. I can't exactly remember, but I know that we're definitely addressing that particular challenge that we've had this year. But as sort of Jacob has said, we are much earlier than we are this time last year, and I think really proud actually of the fact that we're nearly at the point of signing the accounts so early in the process between both EY and ourselves.
Okay, well, that's very promising. Are there any other questions on the external audit? James?
So some of my questions have been answered already in the description, but one of the areas that also required improvement was the volume of misstatements in the disclosure. So I was just wondering why that came about and what can be done in future to ensure that doesn't happen again.
So I think in terms of earlier in the report, you will have seen our reporting of any material misstatements. So those are those of significance, and I'm pleased to say there's only one. I think there is an element of those statement of accounts are a big, chunky document. So an element of misstatements in disclosure is potentially inevitable, and especially with that tight timetable for the GLA to publish, I think there is a potentially pass to fay in terms of what more could be done going forward. But I think it's some of those smaller areas, more technical areas or more narrative type based areas. And I'd also say that management have been willing to adjust for all of those. So when the final signed accounts are available, all of those disclosure misstatements we've identified would be corrected for.
Helpful. So just to assure you, when I saw that in the report from EY, I've got the information from the team, so I'm really clear about why that the council tax, I think it's the council tax or business, I'm just checking. The council tax change, what arose as a result of that. So we'll certainly make sure in future that that lesson can be learned. And I read the statement of accounts from cover to cover. So not only is it produced by the team, and there's checking in the team, both myself and the director for finance read the accounts. So we try and spot some of those things as well in that process. So we already have quite a robust process ourselves. But sometimes, through the audit that's the whole point of having the audit team. They're checking these things, and these things do on occasion happen. But that's not, for an accounts of our complexity, this level of misstatements is very small, actually, to be honest with you, would be my view. Yeah.
Thank you, Chair.
Thank you very much. I think those are all of our questions on the external audit report. So thank you very much, Jacob and Stephen, for joining us. I don't think we have any further items on the external audit, so you're free to go about the rest of your day. Thank you very much.
Thank you very much.
Sorry, let me try that again. Can I ask the panel to note the contents of the external auditor's GLA audit results report? Great. So we now move to item 6, our internal audit reports, where we're joined in the chamber by David Esling and Mark Woodley from MOPAC. So David, if we can go through the usual process of introducing each section bit by bit, and then we'll work our way through.
Thank you, Chair. So firstly, I'll just take you through the summary of work that's been completed since the last meeting. Then Mark will talk you through the substantive elements of the reports that we've presented today. Of those, we're bringing the Disability Working Practices report, the Royal Docs report as full first-time reviews, and then Material Systems, and that's payroll follow-up review, and the procurement of major events covering New Year's Eve follow-up. And as I say, Mark will talk to those. Just to let you know that we plan to bring to the next meeting the grant management review, and the draft reports for procurement, the shared services arrangement and creative industries growth portfolio. And we will be bringing those to the December audit panel. Those are currently in draft in discussion with management. Fieldwork is currently underway with the reviews of Skills Bootcamp, the London Resilience New Deal for Young People, the Freedom of Information Act 2000, and also the Environment Information Regulations. And as I say, those reviews are currently at fieldwork stage. I'll take the reports in front of you as read, but we'll just highlight elements in the counter fraud work that we've completed. Mentioned there Skills Bootcamp. As I say, we are currently doing we'll be undertaking a review of that area. But this, just to highlight that we were asked to look at some fraudulent or some fraudulent activity was identified at an early stage, and this is through lessons learned that we've previously identified and shared with the team, and that contract was ceased due to some poor sign-in records or sign-in records not existing in some cases. So the company that contract was terminated. And you see the value there, although 137k was work that was actually undertaken, but they terminated the contract due to those poor practices from that particular company. Also touching on the National Fraud Initiative, which we are heavily sort of involved with the GLA. As you see the numbers in the report, we are currently engaging with TfL, who deal with the GLA's creditor-related reports and matches, and that work is looking at those matches to investigate whether there's any, again, either duplication or other areas that need to be investigated further. The team attend the GLA Community Counter-Fraud Forum. That's a quarterly meeting, and that's a very useful forum because it encompasses the GLA family. So we share as a family the areas of fraud that those organisations are currently dealing with. So if there's crossover there that we can learn from, and as I said, it's a very good, useful forum for sharing activity, in particular fraudulent activity. We also the counter-fraud team have been undertaking training, and they provided that to the Digital Experience Unit, and have some further some further agreed training dates for March to take forward. And again, those have been well received, and there's been some good learning from that. That's it from me, and then we can go into the substantive report, but obviously happy to take any questions on that update if there are any.
The dreaded phrase, more of an observation than a question, but I think the thing about the boot camp and the picking up the fraud there, I think that's a sort of mixed picture, isn't it? So on the one hand, the fact that we've identified problems there before with sort of skills and training seems to be a hot spot, I say, something like that. So that's not good. But the fact that it's on our radar, we've only lost about a third of the value, and presumably at least some value was done for that. Some value of work was done. It wasn't entirely lost.
Yeah, that wasn't. Yeah, the termination of the contract was due to their inability to show and demonstrate that they'd kept the appropriate records. And as I say, we are covering the boot camps in a formal review where all these areas of learning that have been picked up in fraudulent activity, so we'll be looking at that as part of that review in the next quarter.
Yeah, I look forward to that because I think it just feels like, because it's an area that seems a bit, I don't want to cast aspersions, ripe is perhaps the right word. It seems like an area that warrants a bit more closer scrutiny, and as part of our normal business as usual, rather than just
Yes.
the sort of periodic audit approach. So hopefully that will
be
yield
fed into the scope of our review, definitely.
Brilliant. And the other thing I just wanted to flag up was looking forward to the bit about grant management, because I think this is something that's been a bit of a bugbear of mine for some time. So I look forward to seeing that. Before we go on to the first bit, any other questions on that main part?
You actually asked the question I was going to ask. So,
Oh, sorry, Alex. I've asked the question. Apologies. James, no?
Is the disability working practices included in this bit?
We'll get to that. So apologies. So what we'll do, we'll work our way through each of the appendices, and we'll do questions one by one. Otherwise, it just becomes a bit too complicated.
No.
So we will get there. Okay, good. In that case, let's move on.
I'll start with the follow-up review of procurement of major events, New Year's Eve. We reviewed the procurement of major events New Year's Eve in September 2024 and concluded a substantial assurance. One management action was agreed to improve the management of the key risks identified with an agreed deadline of October 2024. We concluded that there's been an improvement to the overall control framework since the original review. The one recommendation has been fully implemented as the risk register has been updated to include a column that clearly shows the mitigation leads and the risk owner. So there was one outstanding action, and that's been fully implemented.
Great. I mean, that looks like a clean bill of health. I don't think we have any questions. So we can move on to disability working practices.
Right, okay, disability working practices. We reviewed the disability working practices to establish whether disability is being managed and operated effectively across the GLA. We also reviewed whether relevant policies, guidance and resources such as training are in place. Our conclusion was an adequate assurance. 2 medium risk actions were identified and agreed. In particular, we concluded that a workplace disability framework has been established with disability equality included in the Equality, Diversity, Inclusion and Culture Strategy and the GLA Inclusion Programme with strategic oversight by People Board and the Equality, Diversity, Inclusion and Culture Strategic Board. We also found that there were clearly defined, approved and documented policies, procedures and guidance in place that set out how the GLA will comply with the Equality Act 2010 and its equality, diversity and inclusion obligations. We also identified that roles, responsibilities and accountabilities are clearly identified. Training on disability and inclusion is mandatory for all line managers and staff. However, there is no record maintained for the disability e-learning training for all staff. Disability training had a target to maintain a 90% completion rate by July 2025. However, at the time of the audit, 47% had been achieved for disability equality training for managers. There is also no record maintained on disability training for hiring managers and officers that sit on interview panels. Finally, adequate, timely and relevant management information is produced to address issues in relation to inclusion, accessibility, pay, recognition, development and training, with oversight and informed decision-making through relevant boards and committees. That's it. Thank you.
Thank you very much. James.
Thank you for that. My question is just on the disability training for managers. As you mentioned, only 40% of managers have the appropriate training on disability and inclusion. So what actions are being taken to raise this to the target of 90%?
So I'll take that one. Thank you. Yes, the target is 90%. We're not happy with the fact that we haven't reached that target. There are a number of reasons for that. There were a number of course cancellations that happened by the provider. Those individuals have been booked onto future dates. That particularly affected some of the new starters. So because of the courses were cancelled in July, August and September, we've now made an effort to ensure that there are at least 12 courses between now and March. We also had some individuals who cancelled their attendance on the course. That's something we're picking up as well. So if you're booked on a course, you are expected to attend. These are mandatory and we prioritise people on those sessions. We have had a few systems challenges. We can't report on agency staff, which is an area that you may be aware of. We have recently, as part of our EDI challenge programme, we have been looking at disability and attendance on the disability course. So actually, as a result of that, we have noticed that our figures are going up significantly. We do report regularly on the disability training, both in the workforce report and to our people board. So there is much more visibility of what the performance is so that we can do it. So to summarise, one is we needed to make sure the course availability was there. 2, that people understand it is mandatory. 3, that we're monitoring it and bringing it to senior attention so that it is being picked up.
And are you confident this time next year the target will be met or be much closer than it is currently?
Well, it'll definitely be much closer. My intention will be it's met, because I'll be held to account for that one as well in my own area, as will Faye. But yes, the priority is making sure that we do make that target, because it is a key part of how we should be operating.
Thank you. Thank you, Chair.
Thanks. You said you were keeping track. It says on hiring managers and interview panellists, it said there weren't records maintained to confirm that they've done the mandatory training.
That's correct. We have just launched some new training for recruitment, which is mandatory. So we will be tracking that every manager has completed that, and that is one of the actions that we've picked up as a result of the audit.
Okay, so when will the tracking start?
Tracking started, the course was launched in mid-September.
Oh, so that's happening now?
Yes.
So I guess the problem is you get the audit report, and then obviously life continues after the point that report is
Yes, so we're starting to monitor and track it now.
Okay, and if I can, I'm not sure, a question for David or Mark. This is a bit like the theme that we were talking about earlier with the boot camps and so on, and the Adult Skills Fund. Another theme on my time on here is the word mandatory applied to the word training, and then a percentage that starts with a 3 or a 4. Am I right that this is, I think this is something that you've picked up in previous audits where we've had departments with mandatory training requirements on particular areas, and then your report comes back that it's somewhere below half? I don't know if you have I imagined that. Are there previous examples where that sort of?
Well, yeah, I mean, just sort of confirming the point of your question, really. So we have covered mandatory training before, and the figures haven't necessarily been what they should be. I mean, you know, as you stated, you should be looking at 100%. We know that in reality that's not likely to be achieved just because of movement of staff, etc. But I think from what Deanne said just now about the way of monitoring that, and obviously with senior managers being held to account, I would expect to see improvement, because I think in the past that record keeping was probably not as good as it should have been, and then that meant that staff weren't being held to account to ensure that they're doing that training. So I think that there's been a definite improvement, and I think this review shows that the changes that have been made, and we would expect to see improvement in that area going forward, or in those areas going forward, should I say.
Great, I look forward to that. Did you have any questions?
Yeah,
Alex?
Kind of following on from that, and again, you've possibly slightly shot my fox again, but that's fine. I was wondering how this compares to, or this percentage compares to other mandatory training that's expected of staff, and I'm thinking in particular of stuff like unconscious bias, whether that's a high degree of kind of not completing it in the same way as this currently is.
Well, I'll answer. So we are looking at, so to be fair, this is one report that picked up just disability training. We are looking at all of the mandatory training we've got, and it is different for different topics. So depending on where the push, my role is senior information risk owner. Cyber training is definitely going up. We've just launched some new training, so we're pushing that throughout the organisation. But actually, the emphasis needs to be on all of the mandatory training, and we are aware that some of that is being attended more or being conducted more than others. We are aware that there were some problems with this particular training because of the availability. So to be fair to all of the individuals, if there weren't courses available, you couldn't have booked on. That has been true some of the in-person attendance, but we tend to see higher figures in the e-learning. We are now looking at monitoring all of the mandatory training to make sure that we've got attendance and what we're setting as an expectation is actually met.
Thank you very much. I don't see any more questions on the disability working practices. So if we move on to GLA payroll.
Okay, we reviewed the effectiveness and operation of the key financial controls in the processing of HR instructions and the controls over changes to standing data, pay runs and reconciliation arrangements. Just to put a little bit of context into the audit as we were carrying it out, the people function in the GLA has experienced a number of changes during the audit review, with a number of officers leaving the GLA. Following the appointment of new staff members, it was possible for the GLA to provide a large proportion of the evidence that we requested, and also it was possible to have discussions about future plans to address the risk issues highlighted by the audit. In addition, a follow-up review was also undertaken as part of this audit to follow up the recommendations made in our original GLA payroll audit, which was undertaken in October 2023. The conclusion of that was that of the 5 agreed actions, 4 had been fully implemented, 1 had been partly implemented, with 1 new recommendation made. The conclusion of the audit was that there was an adequate assurance. There were 2 high and 3 medium risk actions which were identified and agreed with GLA management. In particular, we found that arrangements for delegation and working arrangements documents are in place for the shared service agreement. Payroll transactions are processed by TfL following notification from the GLA. However, there are issues with notifications to TfL. However, this can be due to line managers being unaware of their responsibilities when informing TfL of any changes to pay. Supporting documentation was not always seen for transactions, and standard electronic forms were not always used as per the procedures. There was also no evidence of checks undertaken of information sent to TfL to confirm changes had taken place. Pay run reports are received by GLA Finance Services from TfL, and a number of checks and reconciliations are undertaken. Performance and planning meetings are held on a regular basis with GLA and TfL, and key performance indicators are reported on. Training was provided when the shared service was put in place. However, further training to line managers of their responsibilities in dealing with starters and leavers has not been provided, which was resulted in TfL receiving late notifications of starters and leavers. Finally, procedures for the authorisation of changes to pay, including standard forms to use, are not available. Changes may be processed without the standard changes forms being used. That's the end of it. Thank you.
Thank you very much. Alex, did you want to go first?
Yeah. So, in the context of these overpayments, and particularly with the late notification of leavers and obviously people being paid beyond where they should have been, what's the actual process for trying to claim that back, and what's the consequence for the person who's been overpaid if they don't engage in that process?
So, legally, an overpayment should be returned back to the organisation. So that is the employer responsibility. It depends. There are some factors that are taken into account, particularly the length of time, whether the individual knew, what efforts have been made. We have now just agreed our overpayments policy, which has set out looking at those particular factors, but looking at the amount and taking decisions, looking at the period of time and taking decisions with that individual, excuse me, to agree a repayment back to the organisation.
To what extent are we then kind of relying on the kind of honesty and good nature of the person to actually pay that back, or if they don't, are there kind of legal routes that you go on, or is there a threshold above an amount which you would pursue a more robust sort of legal route?
So our overpayment policy looks at both. Obviously, if they're current employees, we've got more leverage with those individuals than if they've left the organisation. If they've left the organisation, we can consider whether or not, depending on the amount, the individual and the period of time, whether or not we'd bring in another agency to seek that payment back. Sorry.
Thanks. James.
Just before I go on to my question, just follow up on that last one. If an extra agency is hired, what is it they can do that the GLA wouldn't be able to do?
It's a third-party agency to seek the money back.
If I was an employee, I got included in pay runs that I shouldn't have, I'd spent the money, I don't have it to pay back. I mean, what recourse would this agency have?
So it would be, for example, so obviously HR colleagues are working with me in terms from a finance perspective, and I've seen the list of some of these kind of overpayments, and I'm keen to take a firm position with recovering this money. So I just wanted to mention that from a finance point of view, I'm keen to take a firm position. And often you find when you're recovering debt from individuals, but it's seen as if the organisation is covering that debt, they have a different perspective over the ability of the organisation to recover. They might think, it's the GLA, we're not going to pay back. Whereas if you start getting an external organisation involved, like a debt recovery type organisation, often they take a different perspective in making that repayment. It makes it feels more serious, and so that's the eventual potential. We haven't gone down that route yet, but that's the eventual potential direction that we might need to go in, having exhausted all other routes first of all.
But would overpayment be classed as debt?
Yes, the money's owed back, yeah. And these individuals will know, of course, that they will have been overpaid because they've left the organisation. You can see a situation where someone might be an employee and might not have necessarily perhaps, I think that situation, there's more of an indication in some instances that you might have spotted some so much. But when someone's left an organisation and they're continuing to receive a payment, it's clear that they've received money that they shouldn't have had, and it's effectively a debt. So it's a debt recovery. You would treat it like debt recovery system. Yeah.
Thank you. And I'll just move now on to fixed-term contract leavers. So as we've kind of established, fixed-term contract leavers aren't automatically removed from the payroll at the end of contracts, and that can result in them continuing to be overpaid after officers left and processes not fully authorised or supported. And sample testing identified a leaver who was included in a further 6 pay runs after leaving. So given this issue, do we have any estimates of the total value of overpayments that have been made?
The report, I think, picked up this period in period 13 that identified it was 5k for that particular period. If you, we do have an understanding, but if you could give me the period of time, I can follow up that you're looking for. Are you looking for a period, or are you looking for, when you talk about total, if you can let me know what period of time you're looking for, I can provide that for you afterwards.
So just that 5k figure, what's that in reference to?
That reference to the period 13 that was being looked at when they did the report.
So £5,000 is the total value of overpayments for period 13?
That was for this period, yes, that they looked at.
Okay, thank you.
Thanks. So a couple of questions. So on, obviously there are two sort of high priority areas. One is on training, not to harp on about training, but it seems as if the, what's the date here? October 2022 was when the shared service started, the payroll service, I think that's right. And there doesn't seem to have been further training since then in terms of making sure that payroll is properly notified of joiners and leavers. And obviously that's presumably one of the causes of people being paid who shouldn't be, and possibly also cases of people who should be paid, you know, new starters who take a while to be added to the payroll. How come it's taken quite so long to get a grip of, you know, I guess this is managers at different levels in the organisation sort of making sure that information, you know, being trained on how they make sure that information reliably goes through?
I think there is a new renewed focus with the team that we've got. I would also flag that certain things like the cyber incident did have an impact in terms of people's access to systems. So there was a period of time where we couldn't access My HR to put in updates which would identify new starters, leavers, or people that have changed. Remote access has just recently been restored. That has meant that it was just another factor for managers actually being able to update the information at an immediate point in time. Since then, we have now got remote access. We are looking at more reporting, which is, and more reminders. So more reminders going out to directorates on a regular basis about the payroll end. We are looking at reconciliation on a regular basis with finance. We are looking at reports of our new starters or people that have changed to make sure that they have been captured. But the key point you were talking about is around managers. And fundamentally, we can't do all of this without the managers being able to operate. We've run a number of show and tell sessions. I think a number of managers hadn't been shown how to use the system, so we have picked that up with a number of show and tells, which we are continuing to do. And as part of our management training, we are making sure that as part of that, they are looking at the processes that are having to use, they are having to use and to maintain and keep up to date. Because fundamentally, we need every manager in the organisation updating the systems, and what we then will have are fail-safe systems that double-check that's been done.
Okay, but is that the correct date? Was it October 2022 that we went over to the new payroll system, the shared service with TfL?
I believe so, yes.
Only, I don't know, the explanation you've given, it would, you know, if we were sitting here in 2023, would sound like a reasonable, you know, we've got this new system, we're getting everybody on board, we're training people up. But obviously we're now, you know, 3 years on from October 2023. So I'm just struggling to understand how we get, you know, 3 years into a contract with this new system, which is with the TfL. It's not with a completely unknown organisation to us. And somehow we're still struggling with basics like managers knowing how to use the system to notify new joiners and leavers. Because I've not worked in HR, but that seems to me to be a really basic thing that we ought to be able to get right from day one. So, you know, is there an explanation for how it's taken us 3 years to get to a point where we're finding our way through still?
I think the only thing that I would say that makes it quite challenging is that you don't often fill a starter and a leaver form in a system. And so even if you were trained, it's something that when the system changes and starts to refresh every time around, you've got to then look back at the guidance. So I don't know if DM feels that, but I think that's some of the challenge with that particular type of activity versus something you do on a regular basis. But we do have guidance on the intranet in order to advise people, colleagues, how to take some of those activities. Yeah, so I'm not sure if that could be a contributing
I feel like
factor.
I'm even more confused now than I was. But
Because
do
if you're-
people not, surely as an organisation we know, let's put contractors to one side for a moment and just think about permanent staff. Surely we know when new people start and when people who've been with us for a while have left. Is that not just something we just know?
We're talking about the process by which this happens, and the thing I was trying to explain is that you don't employ people it's not something you do every single week or every day. So when something happens and somebody leaves or starts the organisation, the guidance is there on the internet at the moment, but because it's something that people don't do routinely, because you're asking managers who've got experience, like a finance person, and I have to do these forms, and I only do one, because no one wants to leave finance, only very occasionally, and I think that contributes to some of these challenges in these processes. Not that they're not there, but you're expecting managers to self-serve a process they don't do routinely because of the way the systems work. Many organisations, you're not asking someone to do that. You have to do that as a manager, and I just think that's a contributing factor.
Understood. So now it makes sense, but that sort of takes us into my comfort zone of thinking about systems, which is the thing I know about. And if you've got a system that someone uses only occasionally, you need to design the system to be what we would call self-documenting in IT, a system so that it's fairly straightforward, so that someone who doesn't use it often, maybe once or twice a year, it's just really obvious and straightforward. And have we got there now, or have we not quite got there yet? Do we know when we might get there? Is that an aspiration to get there? Is that an unreasonable expectation that I have?
No, I think it's a reasonable expectation, but we are using two systems at the moment. So we've got the MyHR system, which is being replaced by the new success factors. That is the one that is more intuitive. So what we are having to do is to adjust the fact that we've got a current system which is hard to configure. There is a lot of guidance on the internet as to how to use it, but the idea should have been it was intuitive and you didn't need that. However, the new system, it's a straightforward SAP system, but that is part of the development work that we are doing, and we don't have the payroll modules on that yet.
Okay. So then last question for me on this bit. When then do we think we'll be at a point where we really consistently can say we know when people start and we know when people leave, and we're capturing that information and we're making sure it goes across to payroll?
I think we were long before then. I wouldn't want to be having to wait till that length of time. The point is we know when people start, we know when people leave, but that data needs to be entered at a point in time in order to meet payroll cut-off. The challenge is if that data gets entered late, then what will happen is people are overpaid. There are other factors. If somebody is off sick and that is not regularly kept up to date, then what will happen is when their pay drops at that point in time, that also will trigger an overpayment. So it is more than just people starting and leaving. It is also about change of circumstances. Somebody might go part-time. If that data is not entered in before the payroll cut-off, then what will happen is it will trigger an overpayment. We've got much more knowledge about what is happening. We're regularly monitoring it. But the important bit is getting that date in, the timing in before the payroll cut-off. And that is the bit that we need to educate and work with managers more.
Got you. So I think so my question then is, when do we think we'll get to that point?
That's what we're working on here with these recommendations. It's why we've got the training. We're continuing to put additional support in for managers, but we also need to continue to monitor. I have to be frank, I think it's similar to when we were talking about errors. We are never going to get 100% perfect in any of this. There is going to be factors where you miss. Our aim is to get to a less than 1% error rate whenever we get to this.
Yeah, no, I think that's reasonable that you don't expect 100%, but obviously as you say, we look for a number that starts with a 9 and a big number next to it. Just thinking about some of the DIP samples that were done. So one example here was a sample of 5 overpayments was selected, supporting information requested from case officers, and that was 2 late notifications of leavers, 2 overpayments of sickness, and 2 overpayments of sabbatical, which by my maths makes 6, not 5. I'm not quite sure whose notes I'm reading. But it says no supporting information has been received to date on those 5 or possibly 6 cases. So, I mean, that's obviously a long way short of 90-odd%. Do we know what was going on with that DIP sample of 5 or possibly 6? And how come records weren't available for any of those cases?
Not sure. I think maybe we could chase up and find what's happened to those, but it came down to a cut-off point to get the audit completed, and I think at the time that we wanted to finish the audit, we hadn't received it. I can chase up and see whether we've got those items now. I'll see whether we've got them. And
do you know roughly how long would have, how much time elapsed between you making a request and?
No, well, I think as I said before, we did have an issue at the outset of doing the testing, having a problem with getting some of the supporting evidence. Subsequently, there were some changes taking place in people's function, and we got most of the things. One of the things that was missing was those 5 or 6 maybe overpayments. So I'll chase those up and see if we can get hold of those.
I mean, only another example was supporting documentation, including resignation letters, located for only 10 of the 15. So that's a sort of 30-odd% failure rate. And there was another example where the start date didn't match the details on the supporting information. So it feels like when you did your DIP sample and your sort of case studies, the failure rate was pretty high. And I don't know, I assume you select these at random. You don't particularly go looking for examples. So this is presumably a representation of what the success rate of the system is.
Yeah. Yeah, I think, as I said, when we were doing the audit, there was a lot more. There's missing ones still, but there was a lot more missing at the time that we carried out the field work. We could pick that up. But again, when we come to do the follow-up, we can pick up to check that these things are in place. I think sometimes there was an issue with where information was being kept, and perhaps people had left maybe, and the information wasn't readily available. So there's a little bit of that as well, perhaps. But say, come the time we do the follow-up, certainly be expecting to get retest those processes just to check that all the relevant information is being held now.
Presumably then out of a DIP sample of 6 or 10 or 15 or something, you would expect maybe 1 failure in a sample of that size, maybe 2.
Yeah, probably. Yeah, that number is probably a little bit too, bit more on the higher side. Yeah.
Yeah, I suppose all I'm thinking is when I look at, so there seems to be a difficulty with processes in terms of making sure that we know when people are starting and when people are leaving and what the correct amount of money is that we pay them. And there seems to be a challenge with record keeping in terms of this person's left, but why have they left? What are the circumstances? And there were overpayments for these people. Where's the documentation to demonstrate that? All the way through there seem to be problems. And then I look at the fact that we've got an adequate rating, and I wonder how far we were from a limited rating. I don't need to get into grades of rating, but it feels like maybe there's some generosity at work here. That seems like a lot
I think there was,
problems.
but I think there was also some understanding of when we previously audited the system, when it was a limited, there was. I'm not saying there's areas that need to be dealt with here, but it was a better picture than it was previously. It's very difficult to grading where the line is drawn between limited and adequate is quite difficult, to be honest. But we felt that there had been some improvement here within the systems. There were those areas still where there was a bit of work done. And I do feel that during the course of the audit, we did get a definite feel that there was a lot more keenness in trying to deal with the issues that had been highlighted than previously. So there was a bit of positive movement in that direction as well. So,
okay. I don't know. So when will we next hear how things are going at payroll? When's the next audit due?
We'll probably be looking to do it towards the end of the financial year, maybe. I'll double check the implementation dates as well, because we'll link it. If the implementation dates are there, we may be able to do it a little bit earlier. But I think we want to try and get it done within the course of this current audit plan.
Okay.
Yeah.
Only just because my concern is obviously we had a limited assurance before. Now there was a lot of talk of teething problems, which fair enough, maybe a year ago, but it just seems like there's so many bits of process, bits of record keeping that are surfing the edge of limited versus adequate. And I don't know. It worries me that it's a really important thing in terms of not financial management and control, but also staff getting mucked about. And we still feel like we're a long way from there, even though we had quite a. It was a closed session, so I can't say what it was like. But we had a discussion about the difficulties with the payroll previously, and we seem to be a long way on, and we're making very slow progress. Is that an unreasonable observation?
I'll come in there. It's not an unreasonable observation. However, I think, as Mark said, the direction of travel has been positive. The change in staff, I think, once we come to do the follow-up review, as we said, certainly before the end of the financial year, from our side, we would expect, one, that these recommendations have been fully implemented, or at least a long way on to being fully implemented, and we would see that the change in staffing and the points that have been raised here, we would expect to see an even more positive picture. But I think that the changes that occurred from the previous report, changes in staffing, I think there's been sort of one step back, now 2 steps forward. So hopefully we will see the more positive outcome.
Okay, thanks, David. Sorry, Deanne, did you want to?
Yes, I would. I just want to echo that we take this all very seriously in terms of we want to make sure people get paid the right amount at the right time. So we have put a lot of effort in moving from limited to adequate. That's an ongoing journey. It's something that not only have we put the measures here, which are about processes, training, support, countermeasures, it is something that we are monitoring in the same way that we monitor our SME payments. So we are starting to get regular reports at director level on a monthly basis, which is starting to look at whether there are trends or patterns or areas where this is consistently happening and we need to identify more training and support. So I do think you will see an improving journey, not just in terms of... So this is something we have put a lot of effort in, not just within the people function, but across the organisation. And you will see a difference when we come back to the next report.
Okay, I look forward to it. I don't see any other indications. No. Okay, thank you very much. So that takes us to the end of that item. Before we start the next item, I just need to point out for the record that the final item we've got in this section is on the Royal Docks. So there is a public report and there is an additional appendix which is confidential. So I just want to remind everybody of the fact that should you wish to refer to anything in the appendix, we would need to go to a closed session to do that. I would rather avoid doing that. So what I propose is that we deal with only the items in the public report as much as possible, and then if at some point we need to go to a closed session, I can do that. But also just a reminder not to inadvertently mention anything that's in the appendix while we're still in the open session. So all that being said, Mark, appendix 5.
I'll just cover the public part of the audit. We reviewed the processes in place to ensure an appropriate governance and oversight framework is in place, including identification and management of key risks within the framework, financial government, roles and responsibilities, accountabilities and decision making. We concluded a substantial assurance with one medium risk action identified and agreed. In particular, we identified that governance arrangements are in place for the planning and delivery of the Royal Docks delivery plan. A Royal Docks team has been established, a budget allocated and a 5-year delivery plan produced. Project teams have been established and organisational structures are in place and documented. Reporting arrangements have been established and terms of reference are in place. Escalation procedures have been also established with the Officer-led Programme Board and Royal Docks Enterprise Zone Programme Board. Stakeholders and partners have been identified and a tracker is in place. Regular meetings are held with stakeholders and a networking forum is held. Detailed and regular monitoring takes place against the delivery plan and dashboards, and senior management team highlight reports are produced on a regular basis. A programme risk register is in place and regularly reviewed. A performance tracker is also in place and regularly monitored and updated, and budget monitoring takes place, including forecasted cash flows. Detailed management information is regularly submitted to the relevant programme boards and the senior management team. The Officer-led Programme Board and the Royal Docks Enterprise Zone Programme Board has recommenced following a pause due to recruitment. Following on from this, all formal meetings will have documented agenda packs, board papers, full meeting minutes, including decisions and actions. Where there are any informal meetings, summary notes and key action points will be maintained. Thank you.
Thank you very much. And for this item, we're also joined by Daniel Bridge, who's the Programme Manager at the Royal Docks. I don't know whether you wanted to add anything, Daniel, before we... do you have a question, Alex?
Yeah, sure. I mean, given the the scale of what this project is supposed to be potentially able to deliver over a period of time, and thousands of new homes and all this activity, it does seem slightly concerning that it basically went into abeyance for a year, and if without having board meetings with them, and so the potential that it can deliver doesn't seem to match up with, as I see it, the kind of priority that it's been given. Is that a fair comment to make?
So I think to give some reassurance, the abeyance of the EZ programme board was related to the mayoral elections and the requirement for the mayor to reappoint the board following the mayoral election. But we understood that was going to happen, and the delivery plan and the work programmes were all approved to enable the approved programme activity to continue during that process of recruitment of a new board. I think it's also fair to say that the Enterprise Zone Programme Board oversees the strategic direction and approves that direction of all of the activity within the Enterprise Zone, but then all of that activity has to go through standard internal GLA approval and management processes, and we need to seek mayoral decisions and director decisions as set out in the paper. So I think it's unfair to say that there wasn't oversight during that period of time.
Maybe not one of the mayor's highest priorities then. Okay, that's fine. I may come up with something else a bit later on, but I'll let Neil go in first, if that's okay.
Thanks. Just on that, so I think there's confusingly there are two boards. There's the board, and then there's the officer level sub.
Yeah, officer level programme board. Yeah,
programme board. Yeah. Yes, that's it. So the board. So when I looked, the officer level programme board, I think the last public minutes would. I'm going from memory now, was it July 2023?
Yeah.
At the end of that set of minutes, it said, we look forward to the next meeting, which I think was due in October 2023.
Yes.
And that just never happened.
Yeah.
And then there was then just a big gap until, was it July this year?
Yeah.
And the end of as I said, the minutes at the end of the July meeting in 2023 implied that there would be another meeting, I think, on Teams coming up.
Yeah.
So I'm not quite sure that fits the description of it sort of being deliberately paused ahead of the mayoral election.
Sorry, apologies. I was referencing the EZ programme board, which is the sort of formal high-level board.
Understood.
You're absolutely right. Within the governance structure, when we designed the governance structure, we had what we call the officer level programme board, which is the senior officers from the GLA and from the London Borough of Newham that meet in between the Enterprise Zone programme boards. And that was primarily and originally implemented to enable any sort of quick decisions that needed to be made during the period of time of the Enterprise Zone programme board. In that period of time, we were in communication with senior officers at Newham, and because we were all attending the quarterly EZ programme boards, and because the delivery plans were all approved, strategies were approved, we took the decision that there was no need to meet because no decisions were required in that intervening period. It doesn't mean that senior officers aren't meeting on a regular basis on delivery of projects, and I think we've accepted, as the audit accepted, that it's still important that those meetings take place and are documented. And recorded, even if they're not. And so that's a measure that we've put back in place, and the meetings have started again. And we're holding them and documenting them, even if decisions aren't required in that intervening period.
Got you. Yeah, I think there was maybe some, wasn't completely clear about what are they officially called? So there's the officer level Enterprise Zone Programme Board.
Yes.
Which is what you were just talking about that didn't meet for 2 years.
Yeah.
And what's the other board officially called?
The Enterprise Zone Programme Board.
Enterprise Zone Programme
Yeah.
Board. Which is the sort of overarching board.
So the main one is the Enterprise Zone Programme Board, and that's co-chaired by Tom Copley, Deputy Mayor here, and Roxana Fiaz, the Mayor of Newham, and has independent appointed board members and senior officer representation. And it is the senior officers that are represented on the EZ Programme Board that meet at the officer level Programme Board on the sort of intervening period.
I see. So there is they sort of intervene.
Yeah.
So the minutes then perhaps it was my Google foo that was weak. But when I looked for the board, it was the officer level board minutes that came up. So are the meetings of the Enterprise Zone Programme Board?
Yes.
Are they published somewhere?
Yes.
As well?
Yes.
Okay. I shall look harder.
Yeah. And I'll make sure that we give you access to those.
Okay. And during that period where there were only informal meetings, presumably there's no no record now possible of what was done during those informal meetings. What
That was
agreed or
the
discussed?
that was the one qualification of the report. Yeah, that we should have been documenting those informal meetings, and yeah, they weren't for that short period of time.
Okay. Were there any other questions on this item? Is that a no? No? Okay. No more questions from me, and I don't think you did mention something about the appendix, but then possibly not.
It's fine, we can stay in the open session.
Okay, fine. I don't think we have any questions on the confidential appendix. I think in that case, we've finished on Appendix 5 on the Royal Docs, which I think takes us, in fact, to the end of that item. So can I ask the panel to note the contents of the recent internal audit reports attached to the report at Appendices 1 to 5?
Noted.
Great. Thank you very much. And I think you're already packing away. You didn't need me to say. You got there before me. Thanks very much for attending and for answering our questions. Thanks very much. We have a couple more items. Where are we now? Corporate Risk Register, item 7. Are there any points that members wish officers to consider ahead of the next 6-monthly refresh and update? And for that matter, are there any points that officers would like to raise about the great work done on the recent 6-month Risk Register review? Nothing to add.
It's a good lead-in. I just wanted the panel to note that we did do a deep dive review of our risks. It was good engagement from the senior management team in doing that piece of work. But when you look back at the risks, the strategic risks are very similar to the original strategic risks. Sometimes you reframe them in a slightly different way, but the fundamental risks are pretty similar. But I just wanted to emphasise this is an important part to us, and there was good engagement, including from Deanne at that meeting, who likes risk.
Great. Thanks very much. So can I ask the panel to note the corporate risk register?
Noted.
And item 8, excuse me. We now move on to monitoring of expenses and taxable benefits for the Mayor, elected members and senior staff. Do members have any questions or comments on that? No. So can we note the taxable benefits and expenses incurred by the Mayor, London Assembly members and senior staff during the period 1st of April 2025 to the 31st of August 2025?
Noted.
We now move on to the Register of Gifts and Hospitality for the Mayor of London, London Assembly members. Do members have any questions or comments on that? No. Can I ask the panel to note the report in that case? We've already picked up the pace here, haven't we? Register of Gifts and Hospitality for members of staff. Do members have any questions or comments? No. Can I ask the panel to note the report? Great, and that brings us to the end being nigh. The next meeting of the panel is scheduled for the 15th of December 2025 at 2 p.m. here in the chamber at City Hall. There is no urgent business. Thank you. The meeting is now closed. Thanks, everyone.